Good morning, Britain. Hello, world. I'm Aaron Hazelhurst. Welcome to the program. It's Friday. We've got that feeling. What this is a bite-sized snapshot of all the latest in the world of business and money. We've got lots going on. Let's start in Nigeria. Because I tell you what, Africa's biggest economy is facing its worst crisis in decades. The price of oil, which of course is how the country makes most of its money, well, that price is less than half of what it was 2 years ago. That's brought growth to a standstill. And there is a chronic shortage of foreign currency. So much so, the two major airlines, some big ones, United of America, of course, and Iberia, Spain's Iberia, they've said they're going to no longer fly to the country because A, a lack of demand, but also B, trouble collecting payment. Here's what's going on. We'll put something together for you. Nigeria's currency, it's the Naira. It's pegged to the US dollar at this. This is the official rate of 198. The problem? It ain't nothing like that. In fact, on the black market on Thursday, a US dollar would have cost you this, 368 Naira. 2 weeks ago, the government promised to free up the exchange rate so it basically reflects reality, but they've been stalling doing that because look, the government knows it's going to mean hefty devaluation, inflation would go through the roof. It also means foreign firms, because the government are stalling, foreign firms are reluctant to invest in Nigeria. They're fearful of once they put their money in, they ain't going to get it out. So dollars are very short supply. There's been a plunge in capital, so all the money going into the country. There's been that plunge in the first 3 months of this year. In fact, it was down, look at that, nearly 75% compared to last year. That's according to official figures. And with good reason, perhaps. For instance, those airlines are now owed $600 million. That's from tickets that were sold in Nigeria that the government has yet to release that money. Still, some economists are hopeful that the promise of currency reform will mean much needed foreign cash coming in soon.
It sends a signal even to investors out there because now everybody has been waiting for an adjustment of the currency. So now that investors have seen that, yes, this is the line or the path that the central bank is towing, they are likely to bring in their funds. And it was mentioned that also that one of the supply sources is from foreign investors. So I expect at least down the line, now that this message has been passed across, we should see some investment flows coming in.
OK, let's stay with the story. Anna Rosenberg is Director for Sub-Saharan Africa Research at the Frontier Strategy Group and joins us. Anna, great to have you in. Thanks for coming in so early. Let's start with, you know what, actually, for the uninitiated, those who don't follow this kind of story, can I ask you this? We keep saying about Nigeria is having a problem with foreign currency, all right? What does it, can you just break it down? What does it mean for an economy if it's lacking in foreign currency?
Well, for an economy like Nigeria, it means quite a lot because the country depends a lot on imports because it doesn't produce as much locally. Right. So the oil is a major source for foreign currency earnings, right?
So it sells it in dollars. So yes, Nigeria gets the dollars
exactly,
and then uses the dollars
to import other stuff, any kind of products, consumer goods products, pretty much everything really.
So if there's a shortage in dollars in Nigeria, does that mean they're importing less?
Well, yes, to some extent they're importing less because they can't get access to goods, right? They can't pay for them. So you have a massive problem with inflation right now because prices are going up for pretty much everything. Simple things like tomatoes, 100%, things like that, price increases, yeah.
And is that one of the reasons why Nigeria's government is reluctant to put its currency, you know, to float its currency and to sort of let it reflect reality, devalue it? I mean, Angola, another exporter of oil, it did that with its currency. So is Nigeria reluctant because if it devalues it, then things just go up, right? The prices of everything.
That's one of the reasons, the fear of inflation, hyperinflation. There's a lot of political fear, though, too, because President Buhari, who had a brief stint in power in the 80s, witnessed a period of massive currency depreciation then, that was supposed to fuel local industrialization, but didn't, and caused massive price increases and a major economic crisis. So he's kind of reluctant to contribute to a new depreciation of the economy, but quite frankly, at this point, it is a necessity.
And absolutely. And is there also a bit of a problem, it's like almost a dog chasing its tail, that foreign companies, foreign investors are, you know, are sitting back looking at what's going on with Nigeria's economy and they're going, you know what, at the moment, don't want to put any money into that economy. So that's just, as I said, dog chasing its tail.
Yes, to some extent that is true. We work with Western multinationals that do business across emerging markets, and I would divide them into two camps right now. There are those that have been investing in Nigeria for the past 3 years quite quite aggressively, and they still believe in the long-term opportunity of the country. They're, of course, more cautious. They're revising their targets, but they remain committed. And then there are those that have been eyeing Nigeria for a while and to some extent have been looking for excuses not to make more significant investments because there's so much problems right now in the world that they prefer to focus on the few big growing economies in the world right now, like India or even Poland. And those are more reluctant.
Okay. Anna, we're going to leave it there, short and sweet, but we always appreciate your time. Thank you very much. Anna Rosenberg there, joining us from the Frontier Strategy Group.